Screen time is by far the most important thing you will need in the market to be successful. All right, it's not going to be coming from a boot camp that's going to make you profitable. I'm not going to make you profitable. Screen time after my boot camp will make you profitable. Now, what do I mean by screen time? Like, whenever someone asks me, like, how do you know this, whatever, and I'm like, sometimes my answer is just screen time. But what does that actually mean? Screen time is just how do I want to word this? It's the process of watching the chart so much that you're like, oh my God, I've seen this before, light bulb moment, whatever. That is screen time. It's a signature in price where you've seen it so much where it's like, okay, I know from screen time this is likely going to bounce. I know from screen time this is likely going to reject. I know from screen, like, that's what screen time is. So, like, one of the things that I've learned from screen time is, let's say, candle momentums. Like, whenever, like right here, for example, you can see that we kind of slow down here. We have a bearish gap if this loads. I don't know why this isn't loading. Okay, so apparently my trading view wants to go broken apparently, so we'll just reset this real quick. It's ruining the momentum of the video. I'm very sorry about that. Okay, so we're gonna go back and try this one more time. So from screen time, okay, I know when I see this, I'm like, okay, this doesn't really interest me. There's not really too much going on here. There's a bearish gap. Okay, this bearish fair value gap's getting rejected. And then all of a sudden I see like a ton of momentum over this last lower high. I clearly see we definitely shift structure. So structure, or the market trend, was definitely bearish because we were forming lower lows and lower highs here, like lower high, lower low, lower high here, and a lower low, lower lower. And then all of a sudden, I know from screen time that the way this market structure shift happens, where we kind of break this bearish gap, we get a normal market structure shift here. I know the way this happens that this is likely to turn bullish because I've seen it so much. But what in specific like makes this good, or what in specific makes this like a screen time play? Well, typically a weak market structure shift will not have gigantic three candles that just instantly shoot up. Okay, a bad market structure shift will not have this. So I know from the past and from what I've seen in the past, when I see one candle that's very, very strong, second candle very, very strong, third candle very, very strong, with not even a single pullback, I know that this is probably a very, very strong market structure shift. And I know it's more likely to go higher than if we were to kind of like chop and consolidate around. Like, let me show you what an example could be. Chop and consolidate around, like, let's say we just started doing this. Well, then would I be as confident? Well, not really. But screen time kind of teaches me, okay, well, this is going to be a big market structure shift. Maybe I'll go have your size in here. So this video isn't going to be like, here's what I've learned from screen time. This video is going to be a short video just telling you that screen time is important because you're going to pick up on these little patterns, these little signatures in price. You're going to spot signatures in price much, much quicker. Like, for example, last video, I went over T-Trades, CASD, okay? You're going to be able to spot this in almost an instant with a year or two screen time of looking at this. Like, I can instantly spot that on the chart. You probably can't, okay? Now, screen time is that. It's also knowing signature and price. Maybe screen time is another thing I maybe learned from screen time is something like this. If you ever see us, like, really just start consolidating inside a fair value gap like this, that usually likely means we're going to break the gap. Okay, that's like another thing you'll pick up from screen time. And I can't teach you like individual things like, oh, if we do this, this should happen, because it's not going to be an every time thing. It's going to be something that you're going to slowly pick up after years of watching the market. So, like, again, for example, here I'm like, okay, I'm looking for us to bounce off this gap maybe. Okay. Then all of a sudden I'm like, okay, based off of screen time, we're actually probably not likely bouncing off this gap. We're probably likely to go lower. And how do I know that? Well, I know that from screen time Meanwhile, a bunch of other new traders in the market, they're like, oh, I think we're actually going to bounce off this gap. It's a fair value gap. It should hold. But I know from screen time that's probably not the case, especially if you start seeing price really kind of drop around here where it already should have accelerated out. And that comes to another thing, okay? Another thing I've learned from screen time is how we should react from a gap and how fast, okay? So let me show you this. So typically, if we're going to reject a gap, okay, and go lower, it's going to be most of the time right away. So in this example here, this is actually a live call I had Friday in my Discord. I said, I'm like, this gap should get rejected, and you can actually see we only spend 2 candles inside this and it instantly rejects. I know if that's not the case, and I know if we start like lollygagging inside this, I know I'm probably wrong, because screen time has told me that this gap should not, like, it should hold very quickly. We should go right to the lows. It should not spend time in here, and that's it. Okay, like same thing with this. We don't really spend time in this gap. We reject it right away. You don't really get a bunch of like wicks back up, and then you don't really go over it. You don't go under it. You just simply go into it. The bodies respect it. And remember what I said at the beginning of the bootcamp. Bodies tell the story, wicks do the damage. It's the most important things. You must pay attention to the bodies. You'll see bodies respect the fair value gap, but you'll see the wick go over. It doesn't mean the fair value gap's broken. It still means the fair value gap's being respected. So like here, you see the body clearly respect this gap, and we just instantly reject, and we don't really spend too much time in it. So you're going to learn a lot of things from screen time. I can't teach you what you're going to learn from screen time, because you're going to have to teach yourself what you're going to learn from screen time. And a lot of people don't like hearing that, but it's the truth. Okay. It's the truth. All right. And I can't hold their hand and be like, oh, this should happen from screen time. All right. Another thing you're going to learn from screen time is when to trade and when not to trade. For example, if I'm trading, but all of a sudden I start seeing like a, let's say we get a fair value gap here. Okay, let's say this is the fair value gap. And all of a sudden I see us trading above and below this fair value gap 50 times. That's like a sign from screen time that tells me not to trade, because it's just not clean price action. We're not respecting a fair value gap precisely. And it's another thing that's going to make me not want to trade in the market. All right. So to summarize, screen time is just the years of looking at the chart. You're going to start seeing things that you might have seen before, and that's where that's where you're gonna build conviction. That's where you're gonna have the light bulb in your head, and that is screen time. So if you ever ask me or anyone, and they're like, "How do you know this is gonna happen?" and they say, "Well, some of it was definitely screen time, some of it was experience," that's probably right. If they make up some BS answer, it's probably, I mean, half the time I try not to make up an answer, but half the time for me, it's screen time. And to be honest, there is no answer sometimes. Like, it's something I've seen before. It's something that I felt like it was going to work because it's something I've seen in the past, and that's that. Another thing you can figure out off of screen time is what liquidity to target. So you'll see like these highs and lows that are going to be targeted a lot. For example, the more you trade, the more you realize that these lows, like this low here, this is a low inside of a fair value gap that bounced previously. These are going to be good liquidity pools, and you're gonna learn all this stuff through watching the chart a ton, like what liquidity to target, how fast we should react to something. And for example, like if we don't react to it that fast, maybe there's news, maybe the markets aren't correlated. You're going to learn all this stuff through yourself and through watching the market after watching my bootcamp. And it takes years, okay? Not months. It takes years to figure out, okay? Because I've watched that. I've been watching the market for years. I see these little patterns. I see these little signatures of price. Now, some of the tips that I'm giving you, like obviously not financial advice, for example, like these lows inside these fair value gaps are always targeted. When we should react to a fair value gap, you're going to use these sometimes, but not every time. Maybe you'll kind of learn them yourself, but you have to take what I'm saying and see it for yourself on the chart, because that's the only way you're going to get better. Okay, this is real shit. Okay, I'm not trying to sell you anything. And like you will not be profitable after just watching this video. Like, Daji said this should happen, whatever. You're going to figure out your own things through screen time, and that's that. So that's it for this video. Don't get discouraged if you don't recognize something, because it takes years to recognize a screen time pattern. And you'll know what I'm talking about. Some of you guys probably have seen it. Some of you guys have probably had the light bulb in your head, or like, oh my God, I've seen this before. This is a screen time play. And maybe others of you haven't had that yet, but you need to trade at least 2 to 3 years if you want that kind of feeling. And that's all I got for today. I'll see you guys in the next one. Peace.